Anybody who's going to distribute financial products in Africa will need to use a combination of both. I don't think a pure online approach will scale to most demographics, and I also think a pure offline approach is not taking advantage of the economies of scale that technology gives. And what kind of approach can be? I mean, there are many parallels currently. The fundamental thing to think through is, what do customers want? And these things that customers want are not being met by the incumbents. You can always draw parallels in what the industry looks like. Credit is one major drive. There are credit-led digital banking providers or banking providers. Another one is convenience, where that's probably one of the reasons why mobile money networks or wallets scale, because they provide convenience in terms of onboarding, P2P transfers, more than what the incumbent customers will do. Another approach also is insurance-led, where you have some level of protection for customers. But ultimately, what you always want to do is do a combination of one or two of all, where you have something that's convenient and meets certain consumer needs. I think another one, which is related to convenience, is access. Consumers also want digital bank for many reasons. I mean, of course, I'm learning that in Egypt there are dynamics, but all in all, generally, it's kind of more convenient to transact digitally. But there are cultural norms that you need to get over. What we've seen in Nigeria is the average person would rather do digital because of theft of cash, because of access to credit, and because of the cost of carrying cash around. So if you can provide a tech-driven solution that gives consumers access to this problem, solve convenience problem, access to credit and insurance, and you now distribute it, that's where physical comes. You can't distribute just through apps, because decision-making for consumers in emerging markets is done through word of mouth. The reason why they will trust you is because other people say that you are good. It's not because of what they read online on the internet. So that's why product gets to critical mass, because you get enough word of mouth that will now start making the product start running by itself. So, and word of mouth is generally gotten when people talk to each other, so that's why you need physical. So it's always going to be a combination of both, and the product to push is what consumers want, which is convenience, access, as well as credit.
Thank you.
And low fees.
And low fees.